Good evening, everyone. My name is Paul Young. I'm just going to walk you through the merchandise trade for Canada for April 2016. Now, this is one perspective of merchandise trade. It's not deemed to be the only perspective. You're welcome to go out to Stats Canada, TD Bank, CIBC, BMO, Scotiabank, Canadian Manufacturers Association, different groups to get their perspective and the breakdown of what's going on in terms of exports and trade in general. A little brief bio about myself. I'm a CPA CGA by trade. I do these presentations to get information out because business wants to know what's going on, also what policies are going to drive potentially impact trade. Trade impacts the job creation. Job creation impacts the overall taxation buckets for the government. So I'll talk about merchandise trade in general, what's going on. I'll talk about key sectors. I'll talk about deficit, surplus. I'll talk about key partners, and I'll give you an overview of what's happening and what are the key factors driving it going forward. So if we look at a nutshell in April, and we look at where we are in terms of the trade deficit. Now, the trade deficit is a critical aspect for a country, because what that means is if you're in a trade deficit position, it means you're importing more goods than you're actually exporting. And that leads to issues, what we call as the balance of payments. They can lead to deficits. So that means more excess of cash leaving the country. That being said, Canada's trade deficit has shrunk marginally over the previous month. Not a significant amount of dollars, but significant to say that we've closed that gap. There's more to be done. Now, if we look at key sectors, okay, this is what really drives, and you can't always look at it on a month-to-month basis. You tend to want to look at over a period of time. But this particular case, we can look at a couple things that are critical driving these numbers that give you a good indication of a few things. We had seen strong aerospace sales in terms of the import side and brought everything in. That showed you where some of the strengths were coming in terms of the transportation equipment. What's scary on the import side is machinery and equipment, which gives you an indication whether or not factories, mines, oil productions are actually investing in machinery and equipment. So if you're seeing a lag with that, that means they're not looking at automation and they're conserving cash. That's not a good thing if you look long term in terms of adding capacity when you have an uptick in the economy. So business investment's critical as you move forward, but it has to be tactically done. Right now it's looking like most businesses are hesitant to expand operations or invest in equipment right now. They're letting things play themselves out. So that's things to bear in mind. Now, like anything else, as I said, you're going to see things basically change month-to-month basis. But the real things is that our exports are up marginally, a small percentage from the previous month. And that's something to bear in mind. That's a good sign, but it's not showing you that it's sustainable. And that's something to watch out for. Now, I always like to look at the key sectors. In Canada's case, and especially in automotive side, we've seen a decrease now in the last couple months with trade, and most of the automotive production goes between Canada and the US. That's big ticket items. We've actually seen in the retail sales where people are buying less vehicles the last couple months, and that's impacting the overall numbers. And that's critical because that's a key driver in Ontario because they rely on the automotive sector. What is good to come out of it, we've seen a bit of a rebound in energy products, but that's more price aspect to it because we've seen some improvement in prices. It hasn't gotten above $50 a barrel, but they're seeing some improvement. The other thing that's showing as well is in the forestry numbers is we're showing good indication there too as well that we've seen some strong lumber sales impacting influence what's going on in the US. The US housing market's very strong now. It's back to where basically it was prior to the 2008-2009 global meltdown. So that kind of gives you an idea of what's going on with the merchandise trade. We've been in basically since 2014 we've been in deficit position, and this was what was run on by the Liberal government, saying that Harper hadn't done enough to close that gap down. Well, to close that gap down, you need to expand exports and have less reliance on imports. Now, there's many facets to trade policy, and that means in business, you'll hear about FIPA, which is Foreign Investment Protection Agreement. That allows companies some protection when they're going into new markets. so that they could sue, and if they have any issues with investment or taxation rules or anything like that, they have the ability to protect themselves or protect their investors. The second thing are trade agreements. So the two of them work hand in hand together. If you're going to expand exports, then you really have to have the proper trade agreements, and you need to leverage that. So what's happening is Canada signed TPP, we've got CETA in play, we've got some other side agreements in play, but they take time to start to come to the surface. The second point that's leading to some of this is we're not in a strong period of growth. We haven't been in a strong period of growth for a while. So any sort of exports are going to be based on consumer demands, because most of the economies in the world, about 2/3 of the economy is driven by consumer spending, and that's something to bear in mind too as well. When we look at provinces, this is where you can kind of get a good idea what's going into certain things. Like if you look at Ontario's case, automotive was the weakest. If you look at, for example, PEI, you're looking at industrial products and material where basically their strength with it was relatively flat. So you're looking at key sectors to show you what's going on in the particular provinces. So what does this mean now? Well, as I said in a lot of my presentation, we're in a period of slow growth. Oil continues to struggle to get above $50 a barrel. There's a lot of issues with capacity, both with OPEC sticking to their guns in terms of capacity. That's one thing. Second thing is we lost 1/3 of oil production in Alberta due to the Fort McMurray fire. That didn't show necessarily in the April numbers, but it's likely to show up in May and June numbers as the capacity gets up. Second thing is the softwood lumber agreement's about to expire. A new one needs to come into play. That'll impact forestry exports, so that's something to bear in mind. We have a new Liberal government in power that took office in November. They're honoring TPP, they're honoring CETA. There hasn't been a clear indication what they will work on next in terms of agreement. One of the key areas is India. Some of the other key areas are South Africa, to get into Africa, because South Africa is a critical aspect to get you into the African market. And maybe looking at other areas with Brazil and other countries to expand exports. That hasn't been discussed in terms of what those policies will be, and it's something to watch as we move forward. Third, another point here I want to talk about is government policies. In order to get projects off the ground, they have to go through environmental assessment. There's a struggle to get these projects to move through along. If I'm a business and doing foreign direct investment, that's FDI, then I want to deal with a stable government, but I also want to be able to work with policies that are not handcuffing me to get a project off the ground. And that's something the new government coming into power has to work with the provinces and all stakeholders to get that resolved. Clean technology investment. The new Liberal government's on a pro-clean technology investment. The current business for clean technology businesses in Canada is about $44 billion, growing about $4 or $5 billion a year. So it's a decent business. However, clean technology, like any sort of technology, takes years to get from incubation to market. So even if you make huge investments now, it goes in the R&D spending, helps stimulate a bit of the economy, but it doesn't guarantee that you're going to bring products to market any quicker. And that's something critical to understand, to kind of look at things, because the government already has existing policies like Sustainable Development Technology Corporation, as well as some partnerships with universities and other ways to help support incubation, companies in incubation. The other point I want to make is we're struggling to get exports going. Yes, some of it's global growth, some of it's capacity. In the past, the federal government under Stephen Harper made commitments in ports like Montreal, Sydney, Prince Rupert, and even in Winnipeg, which is a huge interior port with rail systems, to help get goods to market. That commitment needs to be part of the gas tax, as part of the Build Canada Fund, to support exports. There has never been a clear indication so far from the various departments within the Liberal government to determine how they're going to support port development and get goods to market. They talk about it, but they haven't made a clear decision on policy what that will be. And that leads to the second point down there: pipelines, rails, and other roads and bridges to help. There are money in municipalities, but who's going to prioritize that money in terms of the profitable transit systems and profitable things that support economic growth in terms of getting goods to market? Because overall, if you're going to invest in infrastructure, it needs to make most sense. Yes, we need to replace some of the aging, so that has to be part of the strategy, but it also has to support getting goods to market, because goods to market drive revenue. Driving revenue for the government is critical in order to pay for things like healthcare, education, all policies of social programs because they rely on that revenue. So the key aspect as you move forward when you look at trade and export are going to be policies. What this new government does with those policies to support export is going to be critical in how Canada moves forward. Now, that being said, it'll be an interesting time because we are going through slow economic growth globally. We've already seen impacts of Brazil, who's in a depression. We've seen slower growth in Europe. We've seen countries like Venezuela, who are under socialism, collapse. So what's going to happen to this world? Well, we're in periods of instability. So when you're in periods of instability, the last thing you do as a government is bring in bad policy. Because more you shock and awe a system, more difficult it is for that system to respond. So as you walk through, you should be asking your questions to your local MLA, to your local MPP, to your MP, to your counselor. Say, what are your policies going to be to help support economic growth so that my generation of kids and their generations have opportunity? And that's something to do it, to think about that, because with trade itself, for each $1 billion of trade, it creates 5,500 good paying jobs. So why isn't that not discussed more? Because it gets into office politics, possibly. It also gets into what the government wants to do on its own mandate. So it's something that you need to watch as you move forward, because it's going to be critical in terms of things, because exports drive about a third of the economy. And you could say all you want about increasing imports, but the reality is, to increase import, you have to bring manufacturing production here. Well, business have to be enticed that they can make money doing that. So that's the thing. You also have to expand exports, and if you don't have the capacity to do that or have the right policies in play to promote business to go to those new markets, you're going to struggle. So this is the things that you need to ask questions beyond just the rhetoric and say the policies of the previous government didn't work, or the policies of the new government haven't had time to kind of facilitate themselves through the system. That's fine, but the discussions need to be had. So this presentation kind of gives you a little bit about direction and a little bit about what's going on. As I said, people need to ask questions and get beyond the rhetoric and get beyond some of the comments that mainstream media make to kind of look at the details and facts. Numbers do not lie. And that's what I'm showing you with these presentations, the numbers and what's behind the numbers in terms of policy. Thank you.